Hello, everyone, and welcome back to this weekly analysis. This week we lost $750. It was really stupid. I took some pretty bad trades this week. I'm just gonna be going over what I should have done better, what trades I should have taken, and how much I should have actually made if I did everything right. So we're just gonna start here on Monday. This Monday I did not trade because of I swear this is like not the right thing here. Oh no, it is. Okay. So basically our bias was longs. I'm not gonna go too deep into that. We had targets like here, yeah, like here and then here that got swept out. Yeah, it was like London highs, I think. London highs were right here. Those got swept out off market open. So longs didn't look too good, but then we went down and we swept out this hourly liquidity right here. I should like really be charting this out because this is like, there we go. Hourly liquidity down here. After we took out these highs, make a move down, sweep out this liquidity. We get an inverse fair value gap right here. And then after that, we retrace into equilibrium. Then off of that, I'm not going to scale down to a lower time frame because then I'll have to come all the way back here. But literally, this was the move to catch it. Well, maybe a little higher. It was about like here. This was the trade to catch on the 5 minute time frame. Inverse fair value gap, equilibrium hit. Actually, we can just say like it was right there. Equilibrium hit, and then we hit first take profits right here. And then after that, we could target maybe here, maybe up here. But we only get here, stopped at a break even. Still, two risk to reward. It's pretty good because that's about where you would enter. Still pretty good. So Monday, I think, and I don't know, probably about just like, I don't know, like 700 you could have made with your 5 minute strategy. But yeah, that's Monday's move. Tuesday was like pretty much nothing on the 5 minute because we don't even break structure on the 1 minute here. So what we have after we obviously move down, sweep out, draws on liquidity because there's I don't even know where, but yeah, just all of these lows right here we sweep out off market open. Then we break structure to the upside. Equilibrium's right here. We have order block here, fair value gap right here, equilibrium, all this crap, and none of it gets hit. Like some of this stuff might look like a 1 minute break of structure. There wasn't anything in here, and then we push below this liquidity, and I know like how I like trading off these rips down and then targeting these 5 minute lows, but it has to happen right off market open. Like what price would have to do, like I'm gonna show it on Wednesday what price would have to do in order for us to take it, but like it can't make a move down, then chop it up and like attempt to take out highs because on the S&P 500, like this, like if you took a 1 minute trade here, like this trade would have hit on the S&P 500. It just didn't have it on Nasdaq because Nasdaq was the lagging index. But I'm just gonna go into Wednesday now. That just didn't happen really because Nasdaq was the lagging index. And yeah, but Wednesday you see it's completely different, right? Market opens right here. We just push all the way down. Don't even attempt to make a retrace up. We don't even chop it up. What happens here? We chop it up. Then we make our move down, and S&P actually ends up taking out our objectives. So literally, we're just like dead. But this is like it's a little different than the usual strategy. You still enter with all the same confluences, but instead of targeting like key levels, you literally just target all the 5 minute lows on the retracement. This is like the best setup you possibly could have gotten. There's no 5 minute trade, so this is like literally no trade day. So was Tuesday. I didn't actually say that, but that was a no trade day. 1 minute trade was like about here. It was actually a little lower, like here probably. I don't know. It was like somewhere here. I just know it was close to like 1 to 1. It was something like this on the 1 minute to trade. Bro, just place it in the middle of the candle. There you go. So like literally these are all equal highs. So you can just hold if you I'm not doing that, but like if you guys want, this is literally high, 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 all stacked up, literally equal distance from each other. You can just hold all the way up to these highs and you would be chill, just taking full profit there. And yeah, honestly, I don't recommend holding profits up to these fair value gaps and taking profits there because of the fact that like price just making a move up and consolidating, it's like it's really rare. Like prices either after a big rip down and taking out of these lows here, what it's either gonna do is it's gonna go take out these lows, right? It's either gonna consolidate like this, or it's just gonna go and just consolidate to the downside and stop you out. It's like it's kind of just gambling at this point because there isn't really much of a way to tell whether price is going to actually continue and just chop it up higher or if it will just chop it up lower. So full take profits will be taken right here, but really you're taking partials here, and then full closing at this high right here. On the 1 minute though, on the 5 minute you're actually not trading. So yeah, that's it for that day. Dude, I accidentally cleared my charts. That's whatever. This was literally another 1 minute trade day. So what we have here, buys as longs. Literally all of London session is just moving price to the downside. Oh gosh, I cannot talk. Um, Asian highs are like here, bro. Yeah, okay, so Asian highs are right up here. What we get off this, it was really good. Price moves down pretty cleanly, sweeps out. This is like just manipulation of off of London session, not really much of a reversal. We kind of get a reversal during like pre-market, but I wouldn't really count that. There really isn't anything here on the 5 minute to take. This is like our first take profit point, I think. Yeah, I don't know. It doesn't really matter. But like really on the 5 minute, there's nothing to take. Or on the 1 minute, you enter like just about down here, and you're pretty much taking profit on like all these points that actually end up getting hit, which is sweet. But on the 5 minute, there's nothing here. We do get a break. Yeah, that's right. But then if you chart out all of your confluences, oh wait, actually, I did trade this day. I almost forgot. You chart out all your confluences here, right? And then boom, there's that. Equilibrium, order block, and fair value gap. As you can see, none of them get hit. We get close to wicking into this order block right here, but we do not end up doing that. But what we end up doing later though is we hit this fair value gap, and I took a trade off of the 1 minute break of structure there. My target was up at these highs. But this is what I mean by like not trading after your move has already happened, because like literally it's a gamble between whether price is going to consolidate to the upside and hit your take profit and keep moving up, or it's going to consolidate to the downside, or not consolidate, I meant like chop it up to the upside and hit your take profit, or chop it up to the downside and stop you out, which literally that's why after your targets and objectives have been hit, do not look for a second trade, because I haven't traded at that point. I was about to exit the day without trading, and I forced myself to take a stupid trade because it's stupid, and I was mad that TJR made 150K and I missed the 1 minute trade. I saw the 1 minute trade happen in real time and I didn't take it. Oh, because I basically missed it. 1 minute trades are really hard to spot, to be honest. So I lost 450 there when I really shouldn't have even traded at all. But yeah, so really, to be honest, we've only made like 700 this week. And then today, or this day is like pretty simple. I can actually go on the 1 minute for this. But like, yeah, literally, basically equal lows right here to target. I don't think these even, oh yeah, these are like the equal lows. Yeah, I'd say all these lows right here are just great targets for price to barrel through. And then what happens? Price literally goes and barrels down through all these lows. The trade I took here that I lost on, and I also de-risked because it's a 1 minute trade, was this trade right here, because we get order block right here. Price pushing into that after pushing out. And then we get candle closure here. And then I waited for a pullback to enter, which was not smart because I never have done that before. And normally if my risk is bad, I just shouldn't take the trade, which now I'm a little more aware of that. But here I clearly wasn't. And I entered like just about here, and then I got stopped out instantly. But I was right. I knew price wanted to go and take out most of these lows. Just now the lows all the way down here because they were very unachievable. All these right here, though, are very achievable lows. The trade you should have taken, though, would have been this 1 minute trade right here. Nothing on the 5 minute, really. Would have been this trade right here. What we get is push out of the order block. We push into the order block, and we break structure on the same candle, which I didn't even see this happen in real time until I went over the markets, like, very thoroughly. And then literally you're just taking this trade. First profit here. If you want, you can have first profits down here because these are very equal lows. I wouldn't say these are all equal lows. I'd say these are all equal lows, but these are very stacked up lows. So really you're taking like first profit here, and you're almost like forced to take first profit all the way down here because of this candle just ripping down here. And then after that, it's if you still have units in, you can close partials here, or you can try to hold all the way down here. That's kind of unachievable. Like if you have a unit in, I'd let it run all the way down here just in case. But yeah, it's still pretty crazy because if it's like 6 risk to reward, like with one unit of like $50, that's like $300. To be honest, you're pretty much more profitable just taking like the 100 you can get from 2 risk to reward. But yeah, that's pretty much about it. Could have taken a 1 minute trade. Really, the only trade to take would have been that good 5 minute trade this week. Everything else on the 5 minute kind of sucked. But what I am going to start doing next week is I'm going to trade on the 1 minute and the 5 minute and de-risk on 1 minute trades. And literally, that's going to be it, like for the recap. But yeah, all we're going to do next week is just de-risk on 1 minute trades. And yeah, that's honestly it. So subscribe to the channel if you want more trading recaps. Leave a comment down below if you need help with anything trading related. And I will see you guys on Monday for recap 31.